What's going on, investors? In today's video, we are going to go over the Bay Area real estate market update for July of 2022. If this is your first time on the channel, welcome. My name is Sean, and I'm a hard money lender and real estate investor. And on this channel, we go over real estate investing tips, strategies, and current events to help you become a real estate investing boss. If you want to see more content like this, then be sure to smash the like button on this video and hit the subscribe button to see more videos just like this one. In today's video, we're going to be going over the basic statistics for Santa Clara County, San Mateo County, San Francisco County, Alameda County, and Contra Costa County. We'll be going over the stats that real estate investors and real estate agents use to determine the health of the market to see if the market is going up or down. And be sure to stick to the end of this video to see my thoughts on the current real estate market. So let's go to Santa Clara County first. Okay, so this first chart here is the average days on market as well as the sales to list price ratio for single family homes in Santa Clara County. And you can see that the market has taken a huge turn in the wrong direction. These green bars are the average days on market, which means how long it takes from an agent to put a property on the market and for it to actually have an offer that's accepted. So in this case here, it takes an average of 14 days for a property to be put on the market and have a contract accepted by the seller. This is an increase in time from 11 days the month prior and 10 days before that. So as you can see, it takes a little bit longer than usual to sell a property in Santa Clara County. But this is the more interesting one. Look at this huge drop downwards. This huge drop right here signifies the sales to list price ratio, which means how much a property actually gets sold for relative to what the property was listed for. So again, with real estate, just because you list a property for $1 million, it doesn't mean that property will actually sell for $1 million. It'll sell for whatever is the highest offer most of the time, or the one with the best terms. So here you can see that the number has gone down quite a bit. In March, you were getting 117%, which means that if you listed a property for $1 million, then you could expect to get a 17% premium on top of that, or sell it for $1.17 million. In this case, the number has gone down. So now you're looking at 107%. So if you listed that same property for $1 million in this market, then you'll only get $1.07 million. So you're losing about 10% of a difference here. Basically what it's saying is people are not overbidding like they were before in the past. And the market has slowed down such that it takes a little bit longer for properties to actually get under contract. Of course, this is an average. It doesn't mean that every property will sell for 7% over. Some sell for way more and some sell for way less. But this is the average across 11,000 listings. The next stat we look at is the months of inventory. So as you can see here, the months of inventory have increased. Let's look at the actual data itself. 1.6 months. So this is a statistic that agents use to determine how fast properties are moving. And what this means is if no properties were put on the market and the pace of the market selling continues at the same rate, then it'll take 1.6 months to sell every single home in this area. And in Santa Clara County, as you can see from the past in 2021, it's always been a little bit under 1 month. Now we're at 1.6 months. So this is showing that there is a slowdown in the market. The next thing we look at is the number of homes for sale versus sold. And this is very interesting too, because it shows you how many properties are active and on the MLS versus how many properties were actually sold in this time period. Now, properties that are sold are usually properties that were actually put under contract the month prior, because it takes about 30 days for a property to go through all the inspections, appraisals, and finally to close on the deal. So, this 917, this is probably properties that were put under contract in May and finally closed in June. But this is very interesting. Look at how many properties are on the market now. 1,474. This is a lot more than what it was last month. So as you can see here, in December, there weren't too many properties on the market. And then just as the year went by, more and more properties were being put on the market. And around this time frame, a lot of people heard about the news of the stock market's going down, about a pending recession, about interest rates increasing. And I think they just wanted to sell the property before things got worse. So that's why you had this huge influx of properties, in the market. Now, this one's actually kind of concerning too, because at the same time you have more properties on the market, you have less properties that are actually being sold, meaning that maybe there's not as much demand as there was in the past. And how quickly a market can turn, right? There's only a few months and you see way more properties being put on the market than those being sold. So this right here shows me that there is definitely a slowdown in the market. And we can see here that sales prices are actually decreasing over time too. There was that peak here in April during the peak 2022 craze. And now we're starting to see things come back to normal. Starting to go down a little bit. Okay, we'll look at the same statistics, but now for condos and townhouses in Santa Clara County. And again, we have the same pattern here where things are going down. Your sales to list price ratio is going down, but your days on market are increasing. So it's going up here and going down here. Months of inventory here are also increasing. So it's at 1.6 months now. So it's taking longer for properties to be sold. The number of homes for sale versus sold are also a little bit different too. So as you can see here, the more red you have, the more supply you have, and therefore demand is less. Typically, the ideal situation is something like this, where your red and green bars are pretty balanced. And right here, we have so many properties being sold and so few on the market. This is more of a seller's market because there's just so much demand. Properties get snatched up ASAP. Whereas when you have it like this, we have this red bar really high up and the green bar really low. This signifies more of a buyer's market. So more properties on the market, more selection for buyers, and not as many properties actually being sold. All right, and the sales price over time here as well. You can see that this is a little bit fluctuating and it's going down. Now, this value here in July looks like it's going upwards, but we are filming in the very early days of July, so this number isn't actually completely populated yet. So now let's look up Mateo County. And wow, you can see a huge difference here. Ever since March, everything started going down pretty sharply too. So right now we're at 109%, whereas we were at 113% the month before. Days on market here seem to be the same, 14 days, pretty flat. Months of inventory here, it's about 1.7 months now. So it's, again, everything seems to be slowing down. There seems to be a trend. Number of homes for sale versus sold. Again, we see this huge spike of inventory in this month and less properties being sold from the month prior. So properties here are also going down in price just a little bit. All right, and condos and townhouses for San Mateo County have also spiked downwards. So instead of 107%, now we're at 103%. Days on market have stayed the same. So properties are taking the same amount of time to sell. Months of inventory here have also increased. Now we're at 2 months. Your number of homes for sale versus sold. Again, we're seeing more properties go on the market and less properties actually being sold. Your sales price over time here are also steadily decreasing. Now again, don't worry about this number. We're still in the early days of July. All right, San Francisco County, I'm pretty sure it's going to be a pretty big bloodbath here, but let's see. Yep, everything is going down. So here we're at 117%, down from 119%. I believe the common strategy in San Francisco is just list your property super, super low to get a lot of interest in it, and then expect all of the buyers to just bid yourself up by 17 or 20%. And that's why these numbers are kind of high. But as you can see from the trends, it's not as high as it was in the past. Things are getting a little bit lower. And right now it's taking 16 days on average to sell a property. Your months of inventory here have remained pretty steady actually. So this one's only at around 1.5 months. And the number of homes for sale versus sold, as you can see, for the past few years, it's pretty much been, quote unquote buyer's market, where you have more properties on the market than properties actually being sold. The thing about San Francisco though is these people here are pretty rich, so they don't have to take low offers if they don't need to. And sales price over time, again, steadily decreasing, but also not really significant. They seem pretty flat to me. Condos and townhouses. Okay, so for the first time, we're seeing that the sales to list price ratio has remained pretty steady at around 106%. Your days on market are also at 33 days. Now, I think this is because the condo market in San Francisco was already pretty bad, so this news doesn't really change their opinion. It just kind of stays the same. I think it just impacted the really hot markets and left these normal markets the same. So months of inventory here have increased. Now they're at 3.6 months. On average, most real estate agents say that if your days on market is over 3 months, then you're in a buyer's market. Under 3 months, you're in a seller's market. So San Francisco has just been in a buyer's market for a very long time, especially during the peak months of COVID here. And yeah, look at this. This huge red block here versus the green blocks. It's always signifying that there's so much inventory for condos in SF versus the properties that are being sold. And you can see here that the numbers are slowly going down as well. All right, let's look at Alameda County. Okay, in Alameda County, you can see that the numbers are going down as well. So it used to be a super hot market, getting 22% over asking. Now, it's a little more mediocre. It's at 15% or 115%. And your average days on market is 14 days. So a slight slowdown here and a decrease in the sales to list price ratio. Looks like your months of inventory here have also spiked. Now we're at above 1.5 months. And your number of homes for sale versus sold, again, you have this flip here where you have more properties on the market than properties actually being sold. Sales price over time has gone down a little bit. Okay, now let's look at condos and townhouses. So condos and townhouses also has that sharp decline. So now we're at 106%, and it's 18 days on average to sell a property. Okay, months of inventory here have hit almost 2 months. Number of homes for sale versus sold. Again, a huge spike of properties on the market. People just want to sell their houses before things get worse. And we see here that the properties are not selling as quickly either. And right here, the sale price over time is slowly going down as well. So now we're hitting Contra, Costa County. For sure, this number is incorrect. This right here is probably an artifact. Maybe a couple properties were inputted wrong. And so we have this huge average. So we're going to ignore this point. 16 days on average to sell a property. So again, it takes a little bit longer to sell a property here. Months of inventory here has also increased. Seems to be a common trend. And then yeah, more properties on the market than properties that are sold. Okay, and finally we look at the condo and townhouse market for Contra, Costa County. And we have this roller coaster here. Boom and boom. So now we're at 105%, down from its peak of 108.5. But interestingly here, it looks like the properties are selling a little bit faster. So we're at 13 days versus 15 days. Months of inventory have also increased very slightly. And we also see this reversion here, where we have more properties on the market than properties being sold. And then we can see here, oh, prices have actually increased very slightly from May. So this was a Bay Area market update for July of 2022. Again, you might be confused like, hey, if this is a July market update, why are we looking at June numbers? Well, it's because for the MLS, we can only look at the previous month's data. So June just finished. We have everything we need for June, and that's what we report for July going forward. As you can see here, the trend is very obvious. More properties are being put on the market, less properties are being sold. It's taking a little bit longer to sell properties, and the prices are decreasing. This is just the beginning. We've been saying this since January and February that when interest rates increase, we're going to start to see a softening. People in my March videos and April videos are saying, hey, the market is still very hot. You're wrong. We weren't wrong. We just knew that would take some time for everything to kind of adjust. So now we're hitting that adjustment period. Prices are probably going to continue going down for a little bit. More properties are going to be put on the market and less properties are going to be sold, at least for the near future. The Fed is expecting to increase interest rates another couple of times, which will make this chart even worse. It's likely that we're going to see less and less people overbidding on properties. We're going to have less properties actually being sold. We're going to see prices continue to decrease. So if you're a seller, it could be a good time to either sell the property now before it gets worse, or just hold off on selling the property until everything is cleared up. As a buyer, I would say maybe wait 1 or 2 more months, because right now a lot of sellers still don't have the mindset to know that the market has shifted on them. So they may not accept a lower offer. At the same time, right now, the stock market has gone down quite a bit. Interest rates are really high. So if you happen to get pre-qualified a couple of months ago, you might need to be pre-qualified again because the amount you can buy has definitely changed. When interest rates increase, the amount you can afford actually goes down. So your max purchase price might actually be lower than what you expected. It's a scary market out there, but if you plan on buying a property and you plan on living in it for 10, 20, 30 years, then you shouldn't really worry too much about this. These are relatively small aberrations relative to the overall growth that you can have just by holding onto a property for a very long time. As a hard money lender, I've seen a lot of things change over the past few months. It's been absolutely insane, where terms are changed last minute, where some loans just can't be funded anymore because the numbers don't make sense. So if you're flipping houses, make sure you're actually buying a really good deal and you're not just jumping into a project that's really thin. Because if there's not enough meat in the bone, then when the correction finally happens and you finally finish your project, you may not be able to sell it for the amount that you actually wanted to. Long story short, if you're buying a property and you expect to sell it in a really short time frame, like if you're trying to flip a property, then be very, really cautious because the market is shifting right now. But if you're buying for a long term, as a rental property or as your own primary residence, and you can afford the mortgage payments, then by all means, continue making the purchases. There's less competition right now because everyone's a little bit scared. So, it could be an opportunity for you to actually buy the property in the first place. So let me know your thoughts about the Bay Area real estate market. Let us know your thoughts on how things are going and things are going to improve or actually get worse over time. Let me know your thoughts down in the comment section below. And if you guys are interested in more real estate content, then watch this video over here where I talk about how real estate actually lowers our taxes. Thanks for watching, guys. I appreciate you, and I'll see you next time. Take care.